Have you been kicking around the idea of buying a house? You've maybe even used some online tools to calculate what your payments would look like, and you can make it work, and then you tell that you're thinking of buying a house, and they say, well, that's great. Do you have the 20% down that you're going to need? And you go, what? Hey there, future homeowners. It's me, Bjorn, aka Bjorn to Sell, and today's topic is a fun one. We're going to dive into a crucial step in the home buying process, and that's the down payment. Before we jump into that, I want to remind you, if you've been here before, please hit that thumbs up button. And if this is your first time joining, thank you so much for taking the risk and seeing this stuff. But hit that thumbs up button and subscribe so you don't miss any great information. Now, let's talk about down payments. When it comes to purchasing a house, one of the first things that you will encounter is that down payment. It's the initial payment that you're going to make up front, usually expressed as a percentage of the purchase price of the home. I've done other short videos in the past, even some with lenders. And the first and most important thing that I want you to remember is that for first-time home buyers especially, you probably don't need 20% down. So let's get that myth out of the way right now. You're probably didn't give you bad advice, but just didn't give you all the information because, well, maybe they didn't even know about it and it caused some unnecessary fear. What I will say that holds true is that you will need some form of a down payment, a minimum amount. This amount will usually depend upon, one, the type of loan, and two, how much you actually want to put down. And that's where we're diving in a little bit deeper today. So let's take a look at the pros and cons of high and low down payments and kind of how it will play out for you. Let's start off with the pros of the high down payment. The more you put down up front, the lower your monthly mortgage payments are going to be. Plus, a substantial down payment in some cases can get you a much better interest rate. Sounds great, right? But it is essential to consider the other side of this equation. Tying up significant amount of cash in your down payment, well, it's going to mean less liquidity for other investments or expenses that come up. Now, let's look at the other side of the spectrum, the advantages of a low down payment. The biggest advantages of a low down payment is, well, it requires less cash up front, and that can get you into a house much more quicker. It makes housing more accessible. There is, however, cons to consider. A low down payment often means a higher mortgage payment and possibly that you'll have to carry private mortgage insurance, which I've done other videos on in the past too, and that will also increase your payment. Here's a big thing I want you to remember. Down payment is only one portion of the home ownership puzzle. I'm not going to advise you on what size down payment to make. I will, however, encourage you to evaluate your financial situation, consider your long-term plans, and make a decision that aligns with your unique circumstances and goals. That is to say, if your goal is to get out of the rental situation and buy a house, well, let's figure out a way to make this more accessible. If it's an investment standpoint, well, maybe a bigger down payment is better for you. Whether you opt for a higher or low down payment, it's about finding the balance that works for you to meet your financial and home ownership goals. That's all I've got for today. If you found this video helpful, don't forget to give it a thumbs up and subscribe for more information. And you can really also help out by passing it on to a friend, family member, colleague, or just somebody on the street that might be looking to buy a house, because they might just find this information useful as well. Until next time, be kind to one another.